Insurance. It's something almost every American has, yet almost nobody understands. You pay monthly, hope you never need it. And when you finally do, claims get delayed. Paperwork piles up and frustration kicks in. But what if insurance didn't have to feel like that? What if it worked as smoothly as ordering an Uber or buying something on Amazon? That's exactly the problem a startup called Obsolete is trying to solve. And investors are paying attention. In fact, they just raised a massive $21 million to change how insurance works, not just in Asia, but potentially around the world. This isn't just another startup story. This is about the digitization of an industry worth trillions of dollars. An industry that's been slow, outdated, and resistant to change, until now. Because behind the scenes, a quiet revolution is happening. Insurance is becoming invisible, built into the apps you already use every day. And if this trend reaches the US at scale, it could completely change how Americans think about protection, risk, and money. To understand why this matters, you need to understand one word: insurtech. It's the combination of insurance and technology, and it's quietly becoming one of the most powerful forces in finance. Traditional insurance companies have been around for decades, giants with legacy systems, slow processes, and complex policies. But insurtech startups are flipping the model. They're using data, AI, and digital platforms to simplify everything, from pricing to claims. Obsolete is part of this new wave. Instead of forcing users to go through long applications, they embed insurance directly into products. Booking a flight. You get travel insurance instantly. Buying something online. Your purchase can be automatically protected. In the US, companies are experimenting with similar models, but adoption is still early. Meanwhile, in Southeast Asia, the growth is explosive. Why? Because millions of people are entering the financial system for the first time, and they're skipping traditional systems altogether. This is what makes insurtech so powerful. It's not just improving insurance, it's redefining it. And investors know this could be the next big disruption after fintech. When investors put $21 million into a company, they're not just funding growth, they're making a statement. And in this case, the message is clear: insurtech is no longer a niche, it's going mainstream. The funding round was led by Cool Japan Fund, along with major venture firms like Altara Ventures and Gobi Partners. These aren't small players. They represent serious capital with long-term vision, and they're betting that companies like Obsolete can scale across borders. What's even more interesting is that this isn't the company's first success. They've already raised millions before, including backing from a sovereign wealth fund. That means governments and institutional investors are also watching closely. In today's market, funding is harder to get. Investors are more cautious. So when a startup successfully raises this kind of money, it signals confidence, not just in the company, but in the entire sector. This is a strategic bet on the future of insurance. And if they're right, we're looking at the early stages of a massive global shift. Here's where things get really interesting. Obsolete isn't just growing, it's profitable. And in the startup world, that's rare. In 2025, the company reported over $1 million in profit. That might not sound huge compared to tech giants, but for a fast-growing startup, it's a powerful signal. It means the business model actually works. Even more impressive, their customer base doubled from 5 million to over 10 million users in just a couple of years. This combination, profitability and rapid growth, is what every investor is looking for right now, especially in a post-hype tech world where many startups are struggling to survive. In the US, investors have become more selective. They want real numbers, not just promises. And that's exactly what companies like Obsolete are delivering. It shows that insurtech isn't just a cool idea, it's a sustainable business. And when you combine scale, profit, and innovation, you get something very powerful: momentum. Momentum that can push a company beyond its home market and into the global stage. So what does all of this mean for the United States, right? Now, insurance in America is still largely traditional. Yes, there are digital players, but the system is complex, fragmented, and often expensive. But that could change. If the embedded insurance model takes off in the US, it could completely reshape the industry. Imagine buying a car and getting insurance instantly, booking a trip and being covered automatically. No forms, no delays. It's faster, cheaper, and more personalized. And as global startups expand, they don't stay in one region forever. PolicyStreet has already hinted at regional expansion, the next logical step. Bigger markets, the US is the ultimate prize. But there's also competition. American startups, big tech companies, and even traditional insurers are watching this trend closely. The question isn't if change is coming, it's who will lead it. Because in the end, the companies that win won't just sell insurance, they'll make it invisible. And when that happens, the entire industry could be transformed.